Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar rally took a sharp back step early this morning after the press release from the FOMC meeting come out more hawkish. The Australian dollar fell from 81.02 and plummeted to at least over 100 points to 79.85 before reclaiming the 80-cent handle. It is viewed that while the US dollar continues on its path to a bullish streak, we could see further weakness with immediate target seen at 79.75 and lower towards 79.40 to 78.60-70 and reassess from there, with resistance on the day seen at 80.65. Later today at 3:10 we do have the RBA Governor Phil Lowe to speak, so the market will be paying a bit of attention as he highlights more improvements in the economy and discusses the outlook with the non-mining investment growth and also job market conditions that are picking up. So as I mentioned, the dollar index was bullish from the FOMC statement and now posts a bullish outside range day. In terms for the euro is a bearish outside range day and takes out the last 3 trading days. With further weakness to see in the next 12 hours, I expect a challenge of 118.30 and with the broad uptrend coming in at 117.95. Now a break beneath there would give further exposure to the downside and bring in a target of 116.70 to 117 figure. Resistance on the day is seen at 119.30-35 and firmer at 119.70. Well, dollar yen is still holding to its bullish sentiment, with the Fed delivering a slightly more upbeat statement to the fact that they are still looking for one more interest rate for this year and did indicate that we could be looking in December. So the Fed funds have priced in a percentage of around 68 today from previously at 50. The Fed also signaled a more gradual approach in moving forward with only 3 rate hikes, 2 in 2019 and 1 in 2020. Furthermore, the Fed is set to begin unwinding its $4.5 trillion off its balance sheet in October. Interestingly enough, though, the market did shrug off the US President Donald Trump's United Nations talk yesterday, after he vowed to totally destroy North Korea unless it backs down from its weapons program. He has also labelled Pyongyang's leader Kim Jong-un as the rocket man on a suicide mission. Now, we have to see what comes out of that and see how Mr. Jong-un responds to Mr. Trump's comments. Today we have the Bank of Japan's rate decision. It is viewed that the market will remain steadily at negative 0.10%. So as I mentioned, the technicals are getting a little bit overheated, and although we have seen a brief challenge towards the top side around 55, I do expect to see a cap coming in at 113.15 and a pullback towards 111.60 to 110.80.85. It is interesting to see that sterling exploded to the upside, but only to be knocked back down again after the 4th rejection from 136.1025 area. The market did, however, get to a high of 57 before backing away and now looks down towards the 134.30-35 level. With Bank of England Governor Mark Carney's speech sounded a little bit more cautious yesterday in the IMF in Washington. And it's interesting that he was very restrained in talking about hikes. We could see in the next few days of a pullback if we see a move under 134.32, 132.60-65, and then potentially see a rally back up towards the region of 136. So for those that are trading long, do be a little bit cautious because this candle is quite negative, and I do expect to see a move down. Well, gold plummeted from 13.16 overnight to a low of 12.96 and taking out the support at 12.99. In light of the technical pattern, I expect to see further weakness, and we could be looking at a move towards 12.80 to 82 before any turnaround. And like with the dollar yen case, the market did shrug off the comments from Mr. Trump, who addressed the United Nations. So therefore, it's likely to see that this pattern will continue towards the downside, but with immediate targets seen at 1,296 to 93, and then 87 and down to 80.82. It is only viewed a break above 1,312 would get further momentum back up towards the top side of around 1360. And to wrap up with oil, the market still holds to its bullish sentiment, and I still view $52 as a potential target. Any pullback sees immediate support at 50.20 and firmer beneath at $49.50 region. So that wraps up my daily video. Thank you very much for joining me this morning, and I hope you have a wonderful day ahead of you.